Okay, before I start with the market overview of what's going on, today is September 4th, 2018. I want to talk about this thing with the fake MMTer, Mike Norman, who runs around and says that inflation causes the dollar to devalue. Inflation causes the dollar to devalue. Think about that. No, that's not true. Okay. It was not inflation that caused Argentina to devalue the currency. No. It was monetary inflation that caused inflation. You don't believe me? Let's take a look at Turkey. What's going on in Turkey? It was the devaluation of the currency that caused the inflation. Okay? That's just the way it is. So what causes monetary inflation? Monetary inflation is a collapse in the productive output of that economy. Okay? Zimbabwe. What happened? They pitchforked the white farmers off the farms. When they took over, they didn't know how to run the farms efficiently. There was a large productive output collapse. And the result was no matter how much money you print, you will not create value. You will not increase the productive output. Okay? It is the production that is going to cause the currency to devalue. Now I want you to go back and look at the chart. Okay, this is the dollar. There's a slight decline in the dollar if you look at the structure of the whole move. This is what I mean. Okay, the structure of this, there's a slight decline. Why is there a slight decline? Well, it's very simple. When the euro came online, okay, of course it's going to be competition because they were supposed to be the next world reserve currency. But you cannot be the next world reserve currency if you're going to be a net exporter, because the rest of the world is going to be starved of euros. so, so it doesn't make sense. So as a world reserve currency, you have to be a net exporter. That's how dollars flow to the rest of the world, and the rest of the world has enough dollars to go and trade with. You can't starve the global economy by uh, exporting, because you're importing euros or importing dollars or so on. Okay, so the euro came online. Fair enough. Competition for the dollar. What happened? A large drop in the dollar. That was not had nothing to do with .com. Okay, bubble. The production was still fine back then. Okay. The second part, after it came back up, the second part, where is this? Well, this part is explained very simply. The deficits went to 10%. There was 10% unemployment. There was a collapse in productive output thanks to the financial crisis. And naturally, the value of the dollar will decline. Okay? That is completely different. This down here is completely different than what happened up here. Now I want you to think about this. If the currency does devalue, and you need more and more dollars to go out and interact with the rest of the world, isn't that inflationary? So where was all the inflation? Non-existent. Non-existent. So when I hear people start using the term inflation as if they know what they're talking about, I'm like, oh boy. There's many forms of inflation. Okay, there's monetary inflation. There's demand inflation. There's stealth inflation. There's expected inflation, where people will consume today, run out and buy today because it's going to be more expensive tomorrow. There's so many different inflations. You can't just, throw them all in one word and say, well, it's inflation. No, that's not the way it works. Okay. Interest rates back here, okay, before the financial crisis were much higher. Why didn't that cause inflation? Okay, inflation was again pretty much the same, 2 to 3%. Where was all the inflation when interest rates were 6%? And now you're going to tell me, oh, the Fed is raising rates, it's going to be inflationary, and because it's going to be inflation, that's going to cause the dollar to devalue. Bullshit. Bullshit. You don't have a clue. 40 years on Wall Street, and this is the best you can do? I mean, you're putting the cart ahead of the horse. No, okay, that's not the way it works. And it's fascinating that people listen and believe this. And I know they don't understand these things. I do. They have their daily lives, and they just go on YouTube, they listen to this fake MMTer run around saying nonsense, and they're like, oh, okay, yeah, that's true. That's a testament of the garbage they put on Bloomberg and CNBC and all these other places. It's just nonsense. People, they don't know what they're talking about. Here's a daily treasury statement that he touts about, oh, you know, the fiscal flows and all this bullshit. That was, you know, what happened to that? All nonsense, right? Okay, well, if you come down here and you look at interest on treasury, okay, interest on treasury, it's 259 billion. Let's say it goes to 300, whatever. That's 1.3%, okay, of total debt. It's nothing. It's garbage. Let's compare now Argentina. Argentina raised their interest rates to 40%, okay, and then it raised them again up to 60%, okay. You think that's going to create what? More productive output? They're going to double their money supply in less than 2 years. That is monetary inflation. First of all, nobody wants the Argentinian peso. And now on top of that, you're going to double the amount of supply of something that nobody wants, okay, in less than 2 years. That is monetary inflation. 1.3% of total debt is not, or 300 billion or whatever, is not monetarily inflationary. That's just garbage. The next argument is, well, you know, it makes the cost of everything else more expensive. No. No. 2% inflation is not going to make a whole hell of a big difference in the grand scheme of things. Okay? 10, 20%? Yeah. That's going to make, you know, that's going to make things more expensive for sure. The cost of borrowing goes up. Okay? That is indeed inflationary. But don't sit here and tell me that 2%, which is accommodative, still accommodative, it's nothing, that it's going to create all this inflation. No. I think it's been so long since we had inflation that people just forgot what inflation is. They just, it's non-existent in their heads, and they hear, oh, 2%, yeah, well, Mike Norman said it's inflation. Oh, yeah, that is inflationary. Yeah, that makes sense. No, it doesn't. If anything, the cost of borrowing, okay, goes up, which says, you know what, I'm not going to use my credit card for this stupid little thing. So therefore, I won't consume. And that's the whole point of using interest rates appropriately, okay? Raising interest rates to 60%, that's, you're not raising interest rates because you're trying to curb spending, okay? You're not going to increase productive output. And you're definitely not going to entice anyone to run out and go buy the Argentinian peso. Okay? Nobody wants it. I don't care if you pay 100% interest rate. Okay? If you're going to double the money supply in less than 2 years, why do I want a peso? I can get it very easily. So when fake MMT or Mike Norman is telling you that inflation causes the dollar to devalue, garbage. Garbage, garbage. Venezuela. What happened to Venezuela? Currency was fine. Large productive output collapsed. Okay, oil dropped. So what happened to the currency? It hyperinflated. They don't have a complex economy. They were relying on one source of value, and that was oil. And as long as it was going up, they were fine. As soon as the price dropped, what happened? Collapse in productive output. What happened to the currency? Hyperinflated. You see, Edward Delzio says it very nicely. He says, it is a position of strength that the U.S. can be a world reserve currency, import, which exports dollars to the rest of the world, and still we achieve unemployment rate of 3.9%. We're creating jobs, 200,000, even at this late stage of the cycle, 200,000 jobs per month, average of last 3 months. Okay, 3.2% unemployment in prime age workforce. That is a powerful, powerful, powerful economy. 5% of the global population producing 25% of global GDP. That is massive. Massive. What other economy can achieve such greatness? You think Turkey is gonna go out and start producing like we do? Not even close. So when you look at Turkey, well, let's take Turkey as an example. What does Turkey do? Well, Turkey imports, U.S. imports. Turkey has 10% unemployment. We have 3.9% unemployment. Turkey has foreign debt. U.S. has foreign debt. But the U.S. produces Boeing 787s, iPads, iPhones, Intel chips, satellites. What does Turkey produce? You see what I'm saying? They cannot do what we do. We are a world reserve currency, and we can import, and we must import, okay, and export dollars to the rest of the world. So, think about what MMT says, the fake MMT kind. What do they say? They say, well, you can borrow, okay, so it's horizontal money, meaning that it doesn't matter. All liabilities equals assets. They say that you can print deficits, okay, and you can import. No, you can't. You cannot do it. U.S. can do it because we're a very strong economy. No other country in the world can do what we do because the results are very clear. Okay? The results are very clear. That's why the Turkish lira is hyperinflating. Here's the chart. Okay? This is the chart. Everybody talks about this. Well, it's because of sanctions. No, it has nothing to do with sanctions. What about this whole piece back here? What about that? But see, everybody focuses here. Yeah, but what about all this? Okay, so why did their inflation recently just rise? And it has been rising. Because the currency was being devalued, because the productive output was not there. And now they have to pay, I think, $179 billion in 11 months. So they're going to acquire dollar, euros from the rest of the world. How? By printing lira? No, you can't do that. Because the more lira you print, the more you devalue the currency. You see how that works? It is not what Mike Norman is saying, that it is inflation that's destroying the currency. No, it is the currency that is not being valued that is causing inflation. So when fake MMTers run around, and Mike is one of them, okay, he's on video, he says it, that imports are a benefit. No. Job destroying imports are not a benefit. You cannot have it both ways. You cannot say that job destroying imports are a benefit, and then on the other hand, the MMT party runs around saying, oh, we need a job guarantee. Well, why do you need a job guarantee? Well, because we're importing. But I thought you said import was a benefit. Well, it is. It will just create unproductive jobs. We'll have a bunch of people get on a 31K per year job that the government would just print money out of thin air and start giving it to them. And they're going to go out and they're going to plant flowers for the public purpose. Another bullshit couple words. Public purpose. And you'll come and peel gum off the sidewalk. These are non-productive jobs. And if they're not productive, then that does not value the currency, which means if a job guarantee was ever to be implemented, we would start to see currency devaluation. If a job guaranteed work, you can go somewhere in the Congo or Somalia or whatever, go implement a job guarantee and see if that currency starts to improve in value, and import everything under the sun and see what happens. The same thing that happens to Turkey. It is wrong of MMT to run around with their political prescription and say you can print, you can create private money, borrow, and you can import, and everything will be all right. And then they give you this little line that says, well, if the debt is denominated in liras, you can always pay in liras, so therefore it can never be insolvent. No, it cannot be insolvent. I can always pay you in liras. I can also pay you in Argentinian pesos. Who wants it? Nobody wants it. Yeah. So you see how they play these word games, okay? Because that's what it is. They never tell you about the value of the currency. They just say, I can pay you in that currency, but at what value will I pay you in that currency? Okay. And then they'll tell you another one. They'll say, well, inflation is the limit. Okay, great. Inflation is the limit. So what should Turkey do? What should Venezuela do? That gives away little free ponies. What should Argentina do now with inflation? And MMT, the fake MMT, has no answer. You know why they don't have an answer? Because there is no answer. Okay? This little, well, inflation is the limit, is just a soundbite. There's no meat behind it. There's nothing. It's just a soundbite. It just sounds good to get you to vote politically for what they believe in. So getting back to Mike Norman, when he's sitting here saying that the dollar's going to collapse, because we raised interest rates to what, 2%. I mean, that's just wrong. So higher interest rates are going to create, let's say, 300 billion worth of dollar creations to pay the bondholders. Okay, if anything was going to devalue the currency, it would have been tax cuts. 1.5 trillion over the next 10 years, whatever the number is. Who knows what it's going to be by then? Okay, and what happened after the tax cuts? The dollar increased in value. Went up. It went up. The mother of all shorts, really? I was telling you multiple times, multiple videos, that is garbage. So how do we know it's garbage? We know it because the productive output of the United States is very strong and healthy. We're at 4.2% GDP. We're creating 200,000 jobs average over the last 3 months. Okay, we have 3.9% unemployment. We have 3.2% unemployment for prime age labor force. We know that everything is firing on all cylinders, despite what the doom and gloomers will tell you. And this is why when you hear Mike Norman, all he talks about constantly is mental game, mental game, mental game. Why? Because he doesn't know what he's talking about. Okay, so all his calls are wrong. So now they have a little support group. Okay, he's building a community over there of people that can cry on each other's shoulders while they're losing their fucking money, hoping, smoking the hopium crack pipe, that something will come along that's going to devalue the dollar. And if by happenstance that happens, well, guess what? He's going to say, look, see, I told you. The Fed will not raise interest rates unless the Fed sees that the economy is reaching full employment and it's expecting some inflation. That's the whole point why they raise interest rates. They don't raise interest rates and then inflation comes. It's the same thing with wage growth. Oh, look, productive output is increasing. Wages are not. Yes, productive output always leads wage growth. I'm not going to give you a pay raise and then hope that my productive output is going to increase. That's not the way it works. Productive output is always first, and then as it increases, then you get the wage growth. When you're at full employment, when there's a scarcity of human capital. So we started to raise rates all the way back here, okay, 2015 December. This is where the dollar was, and as you can see very, very, very clearly, the dollar is in an overall uptrend. It is consolidating in here, okay? And you have to remember that when you're valuing the dollar, you're valuing the dollar against other currencies, and right now it is looking fine. If at some point we do start getting some devaluation because there's a reduction in productive output, then yes, we're going to see it on the chart, and it will start to break this channel. And once it starts breaking the channel, then we can say, okay, you know what, look for lower value of the dollar going forward, okay, because we're printing and there's not the equivalent amount of productive output. The other stupid thing he said was, well, you know, something about Trump saying that NAFTA was the reason why the dollar started going up. Oh, please give me a break. Give me a break. That is just garbage. Okay, we knew that the price was going to come down and bounce. I ask my subscribers. Okay, the whole entire time we're bullish on the dollar, we're bullish on the dollar, we're bullish on the dollar. Could it have come down a little bit more? I even said it on videos. Could it come down a little bit more and then bounce? Yes. I told you this last week. Go look at my videos. What happened? Dollar bounced. Okay? So don't tell me this garbage, cute little stories. Oh, you know, it was Trump that said something. No. No, we knew that this was going to come to the bottom and bounce. So quickly, let's just go through the other currencies and do an update. Euro, obviously, starting to fall back into structure. This, you know, at this point, it either has to start consolidating in here, building some pressure, and then perhaps maybe look for an upside move. But right now, there's nothing here that's bullish. Okay. Taking a look at the S&P 500, we had what I call the Holliday Reversal. Usually what happens going into the holidays, the market goes up, and then once everybody comes back from the holiday, reality sits, and people start taking profits. Okay, we're not expecting a big collapse right now, but this huge drop, and then this very big consolidation going up, breaking the previous high. Typically, what this tells us is there'll probably be some large drop coming at some point in the future, and I don't want to over exaggerate it. Okay, but eventually this structure in here is going to break. Okay, it needs to correct. Maybe it'll come down here and then bounce from here, or have a much deeper pullback. We don't know, but if it does occur, we're going to know about it, and definitely my subscribers will. Taking a look at the Nasdaq, same thing. It had this breakout, if you want to call it that, of this wedge, and we've been long. Okay, we made some money on this one. Again, we had the Holliday Reversal. We had a flag drop down. Let's see how this is going to play out the rest of the week. Emerging markets, okay, still looking weak. We're still looking for more upside in emerging markets. Okay, we're not involved in it right now, but what we are waiting for is for this to start to develop and then break. Once it breaks, we're going to go long and ride it up. If it never breaks, it continues on down, well, we're not going to be a part of it. Okay. 10-year struggling to maintain the structure, which is a rising wedge. Again, typically the way this works is if it breaks down here, we're going to look for lower interest rates. Okay. Right now it's head and shoulders. Okay. Building pressure at the previous high back in 2014. It's building that pressure. Let's see how this is going to play out. Okay, but there's no big movement right now. Tips versus the TLT. This is an inflation indicator. If you just take the tips and you divide that by the 10-year, right now inflation is in nobody's mind. Okay. If you go back to 2013, the inflation expectations were much higher back here, okay, versus where they are today. So much for higher rates being inflationary, huh? Okay, as I mentioned in the previous video, you can see thrust up, consolidation, thrust up, consolidation, thrust up, consolidation. Okay, thrust up and then right back down. Now this structure is questionable at this point. We're probably going to see some kind of a bounce, maybe a consolidation. It will test this trend line and then we'll go from there. Okay, for the rest of the week, we'll see how this develops. As you can see, we went long right in here. Okay, and we had a very nice run up, making some money. I've taken some profits in this one multiple times. So taking a look at Bitcoin for you guys that love this crypto stuff. We're building this wedge. This again, we're looking for downside. We're looking for the next move down. Okay, there's going to be another move down, unfortunately. It might continue a little bit further up, test the top here, but then again, we're looking for more downside. Right now, there's nothing to do. We are still long, as per my old video when I said buy below 6,000. Okay, that's exactly what we did. So and that was back here in July. But again, keep it in mind. Don't be surprised when you see this one start dropping. And finally, we'll leave you with this chart. This is a USD CAD, and as you can see, it has broken out, and we are expecting higher prices in USD CAD to follow. Okay, if it were to come back into this structure here, where it was building pressure, again, you see a thrust up, builds that pressure, counter trend move, it's pointing down. We're expecting upside. We got the upside. If this were to come back into this structure, then we would stop out. It's very simple, not difficult at all. Okay, that's it. Thank you very much. The video went on a little bit longer than usual, but I think it needs to be said because there's a lot of people that listen to this clown, okay, investing clown, and he's definitely a fake MMTer. He doesn't understand how real MMT, pure MMT works, and that's why we have our page, Pure MMT, for the 100% beyond the mains. That's it. Take care. Thank you. Talk to you tomorrow. Bye-bye.